What's up, you guys? Welcome back to the channel. For those of you who are new, my name is Evan and I make videos about hot stocks, dividends, and options. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Now, in today's video, we're going to cover why NIO and some other EV stocks have actually been pulling back quite a bit this past week. And we're also going to cover whether this pullback could continue or whether this is kind of the end, because obviously today NIO is in the green. So those are a few of the things we're going to cover in today's video, but before we jump into it, if you guys wouldn't mind going down and hitting the like button, I would really appreciate it, and it helps out the channel and it lets me know that you guys enjoy these NIO updates every weekday. But jumping into the share price of NIO, they're up almost 5% on the day. And this is good to see because NIO actually started pre-market quite low, and even after the market opened, you can see they pulled back all the way into the $38 range, right at $38.88, and they were down over 14% early on in the trading day. Now obviously from this point they continued going up and now they're up to $47. But to see them pull back all the way to $38 is pretty surprising. But looking at the 1 week on NIO, this is where you can really see how much they've actually been affected in the past week. Now we know in the past few months, NIO has been pretty much going up every single day, and they hardly ever see red days. But now looking at the 1 week chart, seeing as though NIO is down over 14%, especially in the last few days, you can see here on November 30th, this is where we found out about the news that Chinese stocks could become delisted in the future. So because of this, we saw NIO drop here, and they weren't really affected too much on Monday, but then more people found out about the news yesterday on Tuesday, and NIO pulled back even more, and then especially during after hours, and they dropped quite a substantial amount. So here's where they opened today, and then they've been green pretty much all day. So it's good to see NIO recovering from this slight pullback that they've had the last few days. And I'm sure a lot of you guys probably added up on a lot more shares and added more shares to your portfolio with this pullback. But comparing NIO to the overall market, SPY has actually been on a similar trend as NIO today. You can see right around here they were in the green and now they're kind of pulling back down. But this is a similar pattern we're seeing from NIO today. And on the 1 week, SPY is up 0.5%. And the last few days they've been pretty flat, which is kind of similar to NIO. Now we know NIO was in the red and they were pulling back, but they didn't pull back too substantially. Even though they did dip down below $40, their pullback has been pretty minimal in terms of red days. Now if you guys aren't familiar with this brokerage here, this is actually Webull, which has free trading just like Robinhood, but they have all kinds of extra tools at your disposal that you can use to trade with. And it gives you a better idea of when to get into a trade if you guys aren't totally sure. And if you guys sign up using the link in the description, you'll get 4 free stocks when you deposit $100. But looking at NIO, you can see they're right around $47 right now. And this is actually where I drew a trend line for the past couple of videos. I figured they would kind of consolidate around this area. And in my last video, I actually had drawn a line right around here, right around $40. And I said that if NIO continued going down, they would probably pull back all the way to $40. And we even saw them pull back a little bit more than $40. Now, when you're drawing support and resistance, you want as many points touching as possible. And that gives you a more clear picture of the consolidation. So that was the reason why I drew a line right around $40, because it would touch at a few points here. That's the reason why I drew the line at $40, but you can see NIO pulled back all the way to 38, and right around here is where they pulled back to, and you can see that was a previous support line. So it's really not surprising to see NIO pull all the way back to $38. But obviously after they pulled back to 38, we saw them pretty much increase throughout the rest of the trading day. And now they're up to this $47 area. And I think if they can consolidate above $47, they could likely push all the way up to $50. And if they can consolidate around $50 here, that's likely when we'll see them continue going up. But they have to get to that $50 point again to continue going upwards. And so that's kind of the short-term goal for NIO, is to get up to that $50 mark again. But now moving on to more of the research side of things, we're going to kind of dive into why NIO and some of these other EV stocks pulled back a decent amount the last few days, despite some good news actually coming out for all of these EV stocks. So actually starting off with Li Auto, they actually reported record deliveries, much like all these other EV companies are doing. They had 4,646 deliveries in November, and comparing this to October, that's up 25.8%. And this data also came out a day after Goldman Sachs hiked up their price target on NIO and Li Auto. And the price that Goldman Sachs raised on Li Auto was all the way up to $60, and their previous price target was at $20.60. And then on NIO, they actually increased up to $59 from $7.70. And the rating on NIO went from a sell to a neutral, which is a good thing to see from Goldman Sachs, because I'm sure most of you guys probably know, but Goldman Sachs has pretty much always been bearish on most of these EV stocks. So even just to see them upgrade from a sell to a neutral is a big step for NIO. And I would say it's very bullish news from Goldman Sachs. And then also to upgrade from $7.70 up to $59, that's another good piece of news for NIO. And I think this has a lot to do with why NIO and these other EV stocks are up today. Because obviously yesterday and the previous trading day, we saw these EV stocks drop. Because there's a lot of investors worried about the longevity of these Chinese EV stocks. A lot of investors are worried that these stocks could become delisted, especially if they're controlled by the Chinese government, which is what would cause them to become delisted. But the gains we've been seeing in these EV stocks today, I think, is mostly due to these price targets finally catching up to these stocks. But another good piece of news for NIO was that they actually delivered 5,291 vehicles in November. So this is a 109% jump year over year when you compare this November to the previous November in 2019. And I'm sure most of you guys know, but they also want to increase capacity to 7,500 units per month by January. And there's also talk that they could do that by the end of December. And that would be huge for NIO going into 2021, being able to deliver over 7,000 vehicles where their capacity is currently at 5,000. But going back to the price prediction from Goldman Sachs, part of the reason why they actually upgraded their price target on a few of these EV stocks is because they believe that the electric vehicle penetration in China is going to reach around 20% by the year 2025. So this would be up 5% from this year, and they also see penetration reaching 53% by 2035 and 80% by 2050. So looking that far into the future is kind of hard to predict, especially for the year 2050, which is obviously in 30 years. So it's hard to say that 80% of vehicles would be electric vehicles by 2050, but you really never know, especially with China implementing new laws and regulations that could potentially ban or restrict gas-powered vehicles by the year 2035. And if this is the case, we're going to see all these electric vehicle stocks skyrocket and pretty much go to the moon without stopping. Obviously, that's taking into account that these stocks aren't going to be delisted, because obviously if they're delisted, people aren't going to be trading them on these major exchanges, and a lot of them could potentially drop down to penny stocks. Now, I'm not saying that's going to happen, but it's just something to consider, and if it were to happen, it probably wouldn't happen for a few years. Also, if you guys did own a stock and it was delisted, you still would own part of that company, and you would still have your shares. You would just have to trade them on a different exchange. So I think that should kind of put some of your worries aside. If you're concerned that a stock like NIO is going to be delisted, you still do own part of that company. But looking at a couple of the other stocks like Li Auto and XPeng, they actually both fell this morning, just like NIO. And Li Auto actually fell 1.8% in early morning trading. And Li Auto also mentioned that they're going to sell 47 million American depository shares. So it's a potential that we could see Li Auto's price drop because of this. Now, obviously, as I showed you, NIO also sank this morning down to 1.5% in the red, and they also hit that low all the way into the $38 area, which was pretty big to see. And then looking at XPeng, it says that their stock rose 2% after tumbling more than 10% during intraday trading. And these Chinese EV stocks weren't the only ones that were affected, because Tesla also saw a decline this morning during early market trading. Now they kind of leveled off since then, but they were kind of affected this morning as well, even though a lot of this news has to do with Chinese stocks. And obviously we know Tesla is a US company, but if a lot of these Chinese stocks were to be delisted, Tesla would be affected pretty substantially as well, because not only do they have business over in China, but they also affect a lot of these other Chinese stocks. Now, I'm not certain, but I think Tesla's stock would go down if a lot of these Chinese stocks were delisted. Now, you could argue that they would go up because more people would be investing in Tesla over these other Chinese stocks. But I think it would be the opposite. Because these Chinese stocks would be delisted, people might not be interested in EV companies if they're concerned that they could be delisted. Even though Tesla is a US company, they do a lot of business over in China. But going back to the share price of NIO, I think there was too many people worrying that NIO was going to pull back all the way, maybe even to the $20 area. And so because people started selling off, it just kind of snowballed. Now, obviously it looks like it's kind of ending here because NIO has been pretty green all day since they hit that low at $38 today. And I'm sure a lot of people are kicking themselves because they didn't buy in when NIO was pulling back really far this morning. Especially for those of you who watch NIO pretty closely. I'm sure a lot of you guys wish you would have bought in at that $38 area because even just today, NIO has had an $8 price difference from 38 up to 46 and even 47 now. But even at this $47 area, if you believe in NIO long term, they're probably going to be worth way beyond this $47 area. And so even though NIO is green today, this should still be kind of an opportunity to load up on more shares. Because again, going back to the 1 week, you can see they've been down all week, and this is where they're kind of starting to level off and maybe start going back up. And so the times to add more shares to your portfolio, whether that's NIO or any other stock, you don't want to add them when they're at all-time highs if you can help it. Now, I'm not saying you should time the market because you can't really time the market, but if a stock has a red day, that's when you should add more shares on top of your dollar cost averaging every week or every month. So just keep that in mind when you're investing in these stocks like this. When you see red days, those should be the days to add more stocks. Now, obviously, I'm not a financial advisor, so don't take anything I'm saying as financial advice. But if I was in that position, especially with a high share price, I would definitely average down on red days to bring down my average share price. But now for those of you who made it this far into the video, I want to hear what you guys have been doing with your NIO shares the last few days. Have you guys been adding more shares to your portfolio with NIO being red? Or did you guys sell out in fear of NIO pulling back even more? And if you guys did sell out and you secured some profits, are you guys planning on buying back in? Or are you planning on waiting it out and seeing if NIO pulls back even more? Let me know what you guys are doing down in the comments. Lastly, if you guys haven't signed up for Webull, make sure you guys sign up using the link in the description and you'll get 4 free stocks when you sign up and deposit $100. Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching and I'll see you back here in the next one. Bye.